Anticipation for the iPhone X is building to fever pitch this year. Its $1,000 price tag may seem steep to some, but KeyBanc analyst Andy Hargreaves upgraded Apple stock recently because that high price point will bring in more profits per customer. Andy joins us now from Portland to explain. So, Andy, why reverse your earlier decision?
Yeah, I mean, our previous sector weight call was based on unit concern, and I think we just came to the conclusion that, as you pointed out, the higher price, the change to the structure of pricing for storage would drive gross profit per user higher, and that would effectively outweigh the unit concern that we had.
So talk to us about the greater pricing power you see here when it comes to the iPhone X.
Yeah, I mean, there's always been an element of elasticity in the iPhone user base. Contrary to most consumer electronics markets, the prices have gone up fairly consistently over the last decade, but it's been a slow, steady march, and then all of a sudden we get to this year, get price raise, obviously very significant one with the iPhone X, but modest price increases for the 8 and 8 Plus too. And I think what we'll see is we'll just start segmenting out the user base and extracting the maximum gross profit from each of the available segments.
What about some of the downside risks? I mean, are you factoring in this latest move by Qualcomm to try to prevent sales of the iPhone in all of China?
Yeah, I mean, the Qualcomm legal risk is sort of a tail risk to us, meaning the odds are quite low that they're going to be successful in getting injunctions in any single market. So that's not something that we take into huge account. I think the risks that we're more conscious of are the risk of units disappointing and the risk of hitting some elasticity point that we just haven't seen yet.
Are you at all concerned about some of the news we've been hearing of supply chain issues and delays of the iPhone X itself?
Yeah, it's something we're highly conscious of and paying very close attention to on our own part. Supply, though, to us is a transitory issue for the most part. The demand for iPhones usually doesn't go anywhere else because iPhone buyers buy iPhones. They don't buy Android phones. So it would just be a timing issue. Now, if the supply issues manifest into higher costs, then that could be a bigger issue, but we haven't seen that yet.
So beyond the iPhone X, what segment of Apple's business are you most optimistic about? Is it services? I mean, what's going to make up for the rest of the growth?
Well, if we're just being fair, the iPhone still drives the vast majority of gross profit, so that is the sort of 1A and 1B of what we focus on. Services has been growing very, very quickly. I think within that, we're particularly focused on the App Store because to us that's the best business in the services line item. We expect that to slow, but it's still a gem of a business and certainly something that creates a lot of value. And then the watch, I think the watch is sort of regaining some momentum and has a lot of potential.